We're with Dr. Richard Smith, who, if you don't know, is the CEO of Trade Smith and Trade Stops, also chairman of the board for the Foundation for the Study of Cycles. And Richard, what's going on with the study of cycles lately?
Hey, Josh, good to be with you again. Quick clarification there. I'm the former CEO of Trade Smith and Trade Stops. And I am currently the chairman and the CEO of the Foundation for the Study of Cycles. So,
did you sell? Did you sell for a big profit?
It was a fair price, and I am continuing to pursue my passion to bring financial wisdom and financial technology to everyone. And not just to the...
Now we're having Richard Smith on talking about NFTs, crypto, but I'm also going to have him talk about cycles and some of his trading stop strategies, because he's somebody who, if you want to know like how to properly evaluate when you get out of a stock, he has some nice pithy rules for exit strategies. He's also a friend of our Stan Harley, who's a member of our team now. He's our chief market strategist.
Oh, fantastic. That's great to hear. I didn't know that.
So we have our own cycles guy. And
excellent. Congratulations.
You guys knew each other back in California, I think, with the Foundation for the Study of Cycles. These guys are unique. Yes. You know, we should do a YouTube of the meeting of the minds that come together for these events. I've been a fly on the wall at a couple. I've been a fly on the wall at a couple of them, and there's some interesting characters. You know, they're people who follow the lunar cycle. There are people who there's all kinds of interesting people in the world of technical analysis. So we're going to have a whole segment on NFTs, but then I do want to have you talk about how to properly exit market positions. It's something that people don't really know how to do. So congrats for the sale, and hopefully you got a lot of money. So, and then so basically you are a technical analyst by trade. And so where did you become interested in NFTs?
I've been interested in crypto and blockchain for probably about 5 years now. Believe me, I thought I was late to the party 5 years ago. So everybody who feels like they're late to the party today, don't be discouraged. And it always feels that way. But to me, Josh, I have a lot of concerns about the way that the internet is structured today. These kind of highly centralized businesses that seem to just suck up everybody's data and know things about us that we don't even know about ourselves, and engage in behavior modification with that data, for purposes that might not be our own. So I see crypto and blockchain as the basis of a new, more privacy-focused, more rights-focused internet, where individuals and small businesses can start to reclaim some of the power that has been really concentrated in these massively centralized, unbelievably profitable corporations.
In January 2020, there was a Decrypt.co article called "Why Decentralization is the Future of Social Media." And we see the decentralization of art, the decentralization of finance with crypto. Although, with the Winklevi twins, you basically have centralization of crypto in the hands of some of these elite corporations, Coinbase, et cetera. I do want you to talk about that. But what about, I've been hearing about this decentralized social media, but I'm not seeing it. Do you see it on the horizon?
I think it's going to take some time to really come into focus. I think it is happening in limited pockets. It's certainly not something that has reached any level of mass adoption at this point. And there are challenges for mass adoption to the decentralization movement. But it's early on, and I think it's similar to where the internet was itself 20 years ago, 25 years ago, when people didn't know what a .com was, or what an IP address was, or what a hyperlink was. All of these things, if you remember, Josh, were really mysterious and being dismissed by people. And I feel like that's kind of a similar place that we're at with the decentralization technology that's being quite, rapidly developed today. And look, Bitcoin is at $60,000, $65,000. Coinbase is worth $75 billion. There certainly is some mass adoption going on. And maybe we're not in the early days. Maybe we're closer to something like the .com bust of March of 2000, and we can get into that a little bit.
Yeah, I do want to get into that because is this the March?
And
Yeah, I do think it's coming. I mean, if you look at decentralization, which just to be simple, and maybe I'm botching this, but centralized things are like Facebook and Google, where they house on their servers your data, the characteristics about what you like. So if you're a company and you ever wonder, like, why does what I just searched come up on my Verizon TV Fios commercial and vice versa? Advertisers pay money to garner your media attention because of the servers that Google has and Facebook and whatever. So Facebook buys Instagram and I buy WhatsApp. So basically they can spy on you and give you ads that are more relevant to your natural desires because they know what you want more than you do because they know what you click on. So they can, someone once told me, if you look at the like button, Facebook changed the like button to the range of human responses because they found the like button gave a certain dopamine hit, but the love button gave another one. The cry face gave another. So they know what level of serotonin and all of these various chemicals in your brain. They have, data scientists that can see what you really want. So I think it's going to be hard to break free from that centralized movement. Yeah. Apparently there are Steemit and Minds are two most popular decentralized social media apps, but I never even heard of them, So I'm all for decentralization. Yeah, go ahead. Well, let's take a short break. And when we return, we'll be back with Dr. Richard Smith, CEO of the Foundation for the Study of Cycles, on NFTs and the surge in cryptocurrency. We'll be back after these messages. Back with Dr. Richard Smith, the CEO of the Foundation for the Study of Cycles. Now, Twitter founder Jack Dorsey sold his first tweet as an NFT. What about those who say NFTs are really no thing? They're really nothing. It's like a scam. I get that it's a way for artists to mark what is truly theirs, but it seems a little bit scammy to some. What say you to that?
I think that's an understandable perspective given the kinds of things that NFTs are being applied to right now. When you see Jack Dorsey's first tweet selling for millions of dollars, or you see Christie's selling a $69 million digital artwork that most of us, when we look at it, probably wouldn't even feel was art. So look, for some of us, it's hard to sympathize with the valuations put on these things, but I think we have to separate that out from NFT as a technology itself. And I think that NFTs as a way to secure digital assets and to exchange real value online with a new form of digital property rights, I think that is a big deal, and something that increasingly more valuable things that we can all relate to more are going to use NFTs to create new marketplaces online.
Yeah, I think the biggest benefit to NFTs, and I think the U.S. PTO, U.S. Patent and Trademark Office, should embrace it really as a way to protect artists, to protect individual property rights. To me, the value of NFTs that will transcend the fat Donald Trump, and I say that respectfully, that was the picture that went. Was that the one you're talking about that went for $69 million, where Trump was like?
I think there was a lot of those pictures, 5,000 of them, 5,000 days or every day.
Yeah, there was some Donald Trump thing that went for
every day.
66 million, where 69 million was the large Donald Trump that was to me, crazy. But I extract that part of NFTs for the digital intellectual property rights. So I think that could be a really cool thing in the future. That way, you would basically have no need for trademark law disputes. You would have like a mass NFT database, and whoever owned the first NFT would have the rights in that. I could see it really great for intellectual property rights. Also to stop the intellectual theft coming out of China and elsewhere. What say you about that? That's where I really think the greatest import is.
I agree. In fact, I'm invested in a company personally that is using NFT-like technology to create a new property for patents and a new marketplace for patents and intellectual property.
Wow. Yeah, I'd love to know more about that.
And I think it also has applications to financial services, Josh, our line of work. Think about the content that we create, or even the algorithms that get created, insights, methodologies. Why couldn't those be wrapped in NFTs and have those NFTs become more valuable if the insights or the algorithms that are wrapped in that NFT prove to be valuable and create value, and then those you can exchange them online for that value.
Yeah, to me it solves the problem of who created what first. And that to me
way of summing it up
is the biggest benefit of NFTs. I think we're in this, Snoop Dogg is in it and all these weird, players that are feeling I think the benefit there could be music property rights, and you won't have these disputes between Taylor Swift and her former man. I do think as musical artists also have some benefits there. So you were mentioning we are near March of 2000. Let's unpack that a little bit. Are we at March of 2000 for the markets or crypto or both? What say you about that? Is crypto in a bubble?
I think it could be in a bubble. Every 2 decades, every 20 years, there is often a significant correction in the markets for the first couple of years of every second decade. And we haven't really had that yet. We're up on the whole for the years 2020 to 2022. So obviously there's a tremendous amount of positive sentiment in the markets right now, a tremendous amount of speculative fever. And I think anybody who was around in 1999, 2000, this feels familiar to them. And so there's a lot of data that shows that the speculative fervor is very high. We've basically been in a bull market since the 2008-9 financial crisis with all the quantitative easing. And with these kind of market cycles that have pretty consistently manifested every 20 years for the past century, I do think that there's reason to be cautious and to certainly be a little more vigilant in terms of our investments right now.
So is crypto in a bubble and the stock market a little bit of both there? I mean, is crypto
Definitely. I think crypto and crypto I kind of group with technology investing in general, and you see a lot of very high hopes and growth projections for technology companies. I think you see it in SPACs, right? And what's happening there. You see it in the interest in penny stocks and the interest in call options, the retail trading volumes. There's a lot of stuff that's off the charts at levels of optimism that are unprecedented.
Yeah, well, actually, I would say it is precedented. It's very similar to late 90s, like you said, early 2000s behavior.
Yeah.
So what are you seeing with your with crypto as a cycle? Will it have this? I think you're more of a crypto bull, but where do you see it in its life cycle? You know, typically when these things have early adoption, they peak almost like the dot-com bubbles, and then they go down 90%, and then they start building steam along the next decade as you have greater and greater adoption. Or has that already come? And with BlackRock getting into it, and Coinbase, and Fidelity is now getting into, they have a whole group, Fidelity Digital Assets. Are we sort of at the mass market adoption?
I think that it's important to distinguish between our opinions and our strategies for managing risk in the markets, right? So, you know, my opinion, Josh, is that we are in a bubble in these crypto-related asset prices. And that's based on my personal experience. It's based on some data. And so my sense and my feeling is that we are closer to a top than we are to a bottom. And this isn't a place that I'm personally that comfortable buying. But the main thing that I've learned about markets over 25 years is that markets don't care what I think. And markets can remain irrational longer than we can remain solvent, right? So that was John Maynard Keynes, I think, who said that. But that fact of markets, that they can blow our minds, that they can do things that none of us ever expected, and that in fact they seem to regularly do things that none of us ever expected. That's the main aspect of markets that has really fascinated me, and that I need to, most of my work is about kind of figuring out how to make sure that I benefit from market madness, and instead of being, you know, really beat up and possibly even financially destroyed by market madness. And I think that's a lot of what your work is about too.
Yeah, you could definitely be destroyed. The average person is being lured in. Also, what people don't realize is the market always prices in the future. So is the price of Bitcoin today people saying, okay, now I see mass adoption. I see how it's going to work a little bit more, but then we'll have this washover effect like we do with all markets, you know. Although, you know,
I feel like Bitcoin is at a similar place to where Amazon was in 2000. And if you had bought Amazon at the top in 2000 and held it for 20 years, you'd be thrilled. But Amazon fell, I think, as much as 95% from that 2000 top before finally basing and really starting to take off from there.
Yeah,
that's my personal feeling. You know, I could be wrong, but that's my sense of it.
But you also believe, though, that it could become foundational to the economy long term. That it, you know,
and that's why I say it's like Amazon. So Amazon has become foundational to the economy, but there was a very painful period where that was called into doubt. And but yes, I do think that Bitcoin and cryptocurrencies and blockchain generally are going to become foundational to a new economy. Absolutely.
Like the internet. But we could be at internet 1999, not at internet 2020.
And that's a risk that everybody has to understand and factor into their decision making.
Sure. No, wonderful. It's a great point. So we'll be back with Dr. Richard Smith. We're taking your calls all hour at 800-321-0710. If you have a question on NFTs, crypto, whatever it be, call us now, 800-321-0710. And call us right now at 888-988-JOSH and you get the new book, The Income for Life Blueprint. So if you're listening and going, you know what, I like NFT and crypto, it's interesting, but when am I going to retire? Can I retire? Do I have enough money to retire? Am I on the path? See, that's the thing. A lot of these things are hot right now. Coinbase's debut. But you know what? If you bought Coinbase the day the IPO came out, you would have lost like $100 a share. So the average person listening or watching on our YouTube, and you can find and subscribe, hit the subscribe button on our YouTube. Just search for The Financial Quarterback on youtube.com. Most of you should not forsake basic blocking and tackling measures of financial success, which are saving 15%, having term insurance equal to 20 times your nest egg, having disability insurance, learning about Roths and IRAs. Yes, all of these other things are important, but remember, you're going to get old someday, and that day might be soon, and you have to convert your dollars to an income stream in retirement. So call us now at 888-988-JOSH, and we will give you for free this book, The Income for Life Blueprint, and I will break down for you step by step a hypothetical blueprint of your direct income. So call us now, 888-988-JOSH, 888-988-5674. We'll be back after these messages.
The preceding program was sponsored by the Jalinski Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jalinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jalinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jalinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Advisory services offered through Wealth Quarterback LLC.